Good day. I'm back. Yes, it is Monday, and we're at the 14th of March, 2022, 5:35 p.m., and I got a little color. I was out in the beautiful Phoenix area. Unfortunately, I couldn't go see my Cubs. They weren't playing. I missed that by a week because of the lockout, but they'll play again. But it was a ball to go out there, do a lot of different things, drove some electric cars, saw the all kinds of new ones that are out there. The Lucid, what a beautiful car that is, was in it, and had a lot of fun with these different ideas. But when you go away, you get to think. So I'm saying, if you really look at the market, because I was putting out my morning updates, my video for my paid subscribers, and I kept looking and say, we're down $20, $30 from the top in the energy markets. Gold, it's not $2,050, it's $1,950. Silver's not pushing $27 an ounce, it's pushing $25. Copper, I was bullish as can be, thought you would hit $5. You did, you got to 504, 505, you're back to 450. Why? The market's adjusting. The markets know the shortages we have, but you don't keep discounting the same piece of news over and over. Now, the bigger event in the metal market is how are they going to respond to the Fed actions? On Tuesday we begin the FOMC meeting. Wednesday, we get the statement from the Fed at 1, and at 1:30 or thereabouts, Fed Chair Powell will take the lantern, and he will answer questions from the reporters. Now, what's the Fed going to do? They're going to raise interest rates. It's widely expected a quarter-point rate hike for each meeting that it's coming up through the end of the year at this point. Why? Fed has but one tool to fight inflation. It's raising interest rates. What else is it going to do? Yes, it's going to run off the balance sheet, and maybe we'll get ideas as to how they're going to do that. But during a war environment where we could easily be sucked right into it, all you need to do is strike by accident Russia and NATO member. Nobody's going to listen at that point and say, oh, we know it was an accident. You go right after Russia. And the might of NATO compared to Russia, don't you even think that Russia has a chance. They don't. But it won't be the kind of war that you think. At some point, the world is going to stand up to Putin and say, okay, Blinky, push the button because we got more buttons to push than you do. Now, you'll say that's mass annihilation. When you get a bully, and I was thinking about this when I was gone, the only thing that worked in school for me, because I was not the biggest guy, was standing up to the bullies. Yes, I'd get the, kicked out of me in a fight. I showed. Guess how many fights after that? They didn't keep wanting to beat me up because there was no glory in it because I was showing. And whether you beat me up, whether we ended up, and these guys that were beating me are still my close friends today, just give you an idea how crazy life is. But you've got to do that. So we have a bully there. He's got an army that is not as big or as good. Big being they're large, but they're not as good, that's what I mean to say, as the world had thought they would be. Me being one of those guys, I thought this war would end in 7 days, not 3 weeks, and still going on. But the world's got to learn to stand up to this guy. The only thing that he's got over us is the idea, that, which he did, that word, he's putting themselves on nuclear alert. Well, we can go on nuclear alert. We've got Europe. They've got nuclear weapons. Do you honestly think he wants to get involved in that? You may think so, but the nature of bullies is once you stand up to them, they're not bullies anymore. They back away. They find an out for it. But until that occurs, they will push the limit as far as they can go, and that's what this man is doing. Are we prepared to stand up to him under our current administration? I'll let you decide that. That's not for me to decide. I am anti these deals that President Biden's trying to make with Iran. Thank God today, 49 senators, with the exception of Rand Paul, all voted no. They will not vote for an Iranian deal. Try to get that through the Senate. Rand Paul, all he wants to do is see what the deal is. In all fairness to the man, I can understand that. Venezuela. So suddenly we're going to do business with Venezuela for oil. And who owns a lot of the wells there? Russia. Are we out of our minds? At what point does this administration not see right over our borders, Canada, we got something called the Keystone Pipeline. Finish it. We don't need Russian oil. Give reason to these miners to go back and put money to work in what they've got. You've got that at that point in time. Germany, going to buy F-35 jets from America. You put this all together and you say to yourself, so why aren't the metal markets rallying? And I'm going to give you the reason. I think it's that they got used to this for a moment. When we take a look at a weekly chart of closes, gold for the week, today's the first day of the week, is down 1.5%. Okay, it's entitled to get a pullback. When you look at a daily bar chart, you're pulling back here from the peak. Remember, I said 2,050. The peak was 2,078.80, and today we're at 1955. So if you don't think that fear ran out and the market went the other way, shame on you. That's a big price break reversal. Where's the market liable, or likely, not liable, but likely to find support? What about that 18-day average? I call it the line in the sand. Markets that go up dramatically often like to pull back to a key moving average to get their feet again under them. That's where I think it'll begin. 1946.20. I expect professional buying to be showing up between right here and that number going forward. What would hurt the market is certainly getting under this number, which is around the 1911 zone, right in that area. But that's a long way from here. What else did the market do? It suckered people in, and I always love this because I teach it in my enhanced Bollinger Band course. You're over the Bollinger Band, you go up the next day. I know what's going on. The Johnny-come-latelys, the beginners, the guys that opened up their brokerage trading account recently, I'm buying it. That gold's going to $2,500 an ounce. It's over the upper band. Sure it is. Now you start down. Okay, they're going to hold on. I'm going to buy more. The markets, this is my opportunity. They don't realize how charts work and what the momentum is in the market, and they rarely pay attention to momentum, and you do. You can see that the market, number one, it got itself up to an extreme. Take a look at this. Lost the momentum, and that meant you likely, not the word that you have to, go back to a key moving average. But here's your resistance. You were running the upper Bollinger Band those 5 days I was gone, and now you're getting the correction. This is where I think the professional money is going to nibble into the long side of the market. When I look at the gold-silver ratio, June gold versus May silver, so you were like this when I was gone, and that makes sense. Now, if you cross this high from this day right here, and that day would have been on a close, March 9th, got to be a bit careful. You could get a signal, and it's all happened right now, that you want to get back to that 18-day average and fight a battle there. The market is saying 76 is too low, differential of about 80.5 too high, and 77.5 for the time being seems to be where the market's somewhat comfortable. When I look at the silver market, here's your correction. Now, unlike the gold, this is not in an uptrend. You have lower highs, right? Lower lows. Often you go to the 18-day average to regroup that. So because you had this bearishness develop, but you're over the 18-day average, what are you? Neutral. It's that simple. The uptrend ended when this low right here, and that day's low was 25.60. If that's violated, with this chart pattern, you're going to have lower highs, lower lows, and often you result in making a run for the 18-day average of closes. It had never embedded, it just got itself overbought. Okay, different than the gold, the support begins here but drifts in a series of ways to the 200, the 100, and the lower Bollinger Band. A lot of support between current prices and the next $1.50 lower. I teach not to buy under an 18-day average, and I have no reason to buy at the 18-day average on this particular setup. Copper, I was the happiest guy. I went on national TV in Australia, Canada, another country, and they were asking me my trades on TV stations. I forgot which other one I did. And I had two trades. I loved XME and spiders, and I liked copper. And they said, well, what's your copper number? I said, I think it'll go to $5. That was based on this sideways action here where I thought the market could get up to. And if you take a look at the lead contract of March, it went there. This is now the May, you keep rolling over. I was asked this in December, and you're either looking then at the D's contract or the March. You're not looking back at the May. In the platinum, you actually have a bear signal. Until today's high is taken out, you have an outside day down. So until that's taken out, the odds are the market's going to try to make a run just as it's getting already oversold and see what this lower number is. Now, if you clear today's high on Tuesday or Wednesday, game changes on you again. That would be a bear trap because you have an outside day down, which often leads to a challenge of the upper Bollinger Band. Till that occurs, still lower. And we're in the zone of the palladium where I'm looking for the low to develop again too. But look, if you're buying over that Bollinger Band, I am not saying you didn't buy it here and it didn't go higher. I'm saying you're probably not that good. And you're better off waiting your turn. And when you don't, these things happen, and they happen like that. In the dollar index, I did today for TikTok. I hope you listen to TikTok. And I did a piece for the Chicago Mercantile Exchange on it. And it was all about the dollar. And what I posed to people was the dollar people think is in a runaway. It's not. It's in an uptrend, but it's not in a runaway to the upside. It went up to here to 99.47. It fell back $1. Look, it got down here to 97.78. It did not break the trend, but you lost an embedded reading. Now, here you are. Here's the reading. This was March 9th. Here's the next day, Thursday. What was the reading? 77.85. You can't be long now unless you re-embed the next day. It's got to be the very next day. And lo and behold, it re-embeds. Oh my gosh. So now I think until the red line closes back underneath the 79 level, breaks will get bought now going forward. I talk about this and a heck of a lot more in my morning subscriber videos. At 5:30 in the morning, I want to be the guy that you want to look at about 6 in the morning. Why? I want to be the guy that you say, what did he see going on in Asia, Europe, here? What are the reports coming out? What is the chart action looking like? Remember, most futures do trade 24 hours a day or 23 hours a day. Not all, but a great amount of them. So with that, I'm recording for you, and I'm generally posted right after 6 a.m. sometime. You can watch these. You'll get a notice, if you're in America especially, by text and email that the video is ready. If you're not in the United States, you'll get a minimum of an email. And if you have our charting software and you have our package, our free app that works on your phone, it'll put out a push notification as well. I cover all these markets in detail, specific. Do this, do that. And more important, a lot of times I'll say, I don't want you to do a darn thing. In this kind of market, you know how much money that has saved a lot of traders? You add it up. By the way, the SEC today told brokerage firms, not us, that we're not under SEC, we're CFTC, told the stock firms they want them very vigilant now on risk. What do you think we're doing in futures? I'm Ira Epstein. You have yourself a great day, and I'll see you all tomorrow.